And now our top line story. The race for the White House looks a lot different this morning than it did when stock markets closed on Friday. President Joe Biden, in a move that was predicted by many political experts, is now out of the 2024 presidential election. And Vice President Kamala Harris is rapidly gaining endorsements from prominent Democrats. What do the dramatic developments of yesterday mean to investors, including those of us here in Canada? For insight, let's go to our featured guest of the morning. He's Barry Schwartz, Chief Investment Officer at Baskin Wealth Management. Thank you, as always, for coming in.
How you doing, Paul?
We'll have lots to talk about with Barry. He's got a couple of great investor-focused conversations. Let's begin with the big news on the weekend. Markets are up. Is there a connection here?
Well, I think, as you mentioned at the top, this was well predicted. This was well telegraphed, and lots of rumors that this was going to happen. And I think probably a good thing. Maybe it leads to more certainty in terms of, well, it'll be interesting to see if a debate will happen, but definitely a much better candidate for the Democrats. And I guess the point I've been making for many years is let's not worry too much about who's going to be the president. If you look at history, if you look at the stock market returns under Biden, terrific. Market returns under Trump, terrific. Unfortunately, a pandemic happened that kind of hurt a little bit of the results there. You look under the market under Clinton. So Democrat, Republican, do these things really matter? They're great talking points. We can talk all day about politics and who's going to be good for this sector or that sector. I see that some of the companies today that where many think that antitrust may not happen under Trump are now falling back because it's possible that Kamala is a much better candidate to defeat Trump. But the bottom line for us, and why I'm bullish, Paul, on markets is the following. I think interest rates are going to be cut and cut dramatically going forward. We just saw the Bank of China, as you mentioned, cut rates. Canada, no 100% chance of a rate cut in July, and many more going forward. Inflation has been tamed. These are all great things that the market wants. And of course, the wild card is corporate earnings. Most expect S&P 500 companies to report strong organic revenue growth. Why? Because of the tech names that are leading the charge, as well as double-digit growing profit, increasing profit margins. Companies are filled with cash. There's so much cash on those sidelines, and they have to be put to work. You're feeling great about those 5% GICs that you bought a year ago. That's not going to happen a year from now. And so you're going to look at your portfolio, you're going to talk to your advisor, and they're going to recommend, let's start putting it to work in risk-on assets. And we've had underperformance for many years, small cap, value versus the big tech. And we kind of got a glimpse of that last week, a rotation into other stocks. I think it's going to be very good for the markets. Are we overdue for a correction? Maybe we even had one last week. I don't know, but I think the elements are in place for very good markets going forward.
Just to pivot a bit, one place you like to put shareholder capital, your your clients' money is in the stocks of companies that are led by their founder operators. And we've got a list of 4 here that you like. Bruce Flatt at Brookfield is one of them. Mike Rose at Tourmaline is another. Mark Leonard at Constellation Software, and Alan Bedard of TFI International. There they are. You've offered these names to us as founder operators who do a great job of, you always talk about cash flow, free cash flow, and the importance of reinvesting it in a profitable way at these companies. You think it happens here, and the connection between these people and the companies is an important one.
At Baskin Wealth, we are long-term investors. I'm not trading in and out of stocks, predicting what quarterly earnings are going to be and trying to buy the stock in advance of that. I want to partner my money, our clients' money, with operators that can grow our clients' value over a long period of time at double-digit rates. You can only get that with management teams that have skin in the game, that love buying more stock. Like, look at Mike Rose. The guy's close to a billionaire, still buys more shares of Tourmaline. Bruce Flatt, he told you that Brookfield shares were well undervalued, and he put his money where his mouth was last year, buying more shares. These guys don't need the money anymore. They're doing it for the love of the game. Bruce Flatt, Mike Rose, Mark Leonard, they could be at a beach. They could be on a private yacht. They can do anything that they want. But here they are going to work. They love the culture of their companies. They love to grow their companies. And the key is they're amazing capital allocators. Capital allocation is the key if you're going to be a long-term investor. And why not partner with people that do it for the love of the game?